It might seem obvious that you do need to apply for the loan to finance your home purchase, but did you know that there are significant differences in where you are borrowing your money from? There are three most common types of financial options available. Bank, pretty self-explanatory. You can go to the bank where you bank, and they have physical location and they are able to give you your home loan. However, most of those banks have limited products, and they can offer you only 3 to 5 types of loans they have. In addition, they do have a large overhead, and you might be paying a bit more in lender fees. There are a few ways around it, and there are only few scenarios that I'd recommend you getting financing through the bank. If you have a long-lasting relationship with your bank, and if it is a local credit union. Otherwise, keep looking. Mortgage bankers use their funds or funds from a different lenders to fund your loan. They might keep the mortgage loan, or they might sell it to a secondary market or to the investor. That way, you'll have a lot more options to choose from. And the positive of this option is that the mortgage bankers originate real estate loans and fund them. Mortgage broker or lenders, they are intermediaries, but they do not use their own funds to originate the mortgage. They do not have heavy overhead expenses and have a variety of bank and bankers to choose from. So basically, when you are working with the bank, it's like shopping at Nordstrom. They have overhead, but you will get the physical location and the products right there. However, when you are going to the mortgage lender, it's like shopping in Amazon. They have a variety of products you can choose from. They don't have overhead. Therefore, you can get a lower closing cost. Overall, keep on shopping because you need to figure out what's best for you, where to get the money for your home purchase.
The main thing that'll vary with all lenders is closing costs. Please feel free to be open with the lender and tell them that you're shopping for the best deal out there and that you'll be chatting with a few different lenders. Some lenders might offer you portfolio loans, which means they are the only company that provides this type of finance option in their portfolio. And most likely they will keep the loan without packaging it and selling it to other servicers. It might be a program for low credit score borrowers or special offers for educators, doctors, nurses. It might be a low down payment program they offer, and other types of scenarios that may not fit market eligibility. If you're looking to buy a newly built home, they might have their own lenders or finance options that they will offer incentives to work with that lender specifically. More on that in our other course, I Want to Buy a New Build Home. If you're looking to invest in real estate, there are hard money lenders, gap lenders, DSCR loans, and other special financing specifically for investors as well. We'll be talking about this in detail in our other course, Everything You Need to Know to Start Investing in Real Estate, where we provide overviews on Airbnbs, long-term rentals, fix and flips, investing like that.
In this course, we'll keep discussing owner-occupied, also known as primary residence purchases. You might have a question, how can I choose a lender without them pulling my credit and taking it? No worries. There are definitely a few ways. If you're just exploring and you're not sure where you stand with your credit, not sure where your monthly payments will be, and want to know what you can borrow, reach out to one of the lenders and get a pre-qualification. It is simply a consultation with the lender about your income, your assets, and the down payment bracket. It will help you with the home buying clarity. Will keep your credit untouched because they do the soft pull on this, but it will not guarantee you a loan. And whenever you are ready to start the process, make sure you get pre-approval. That's when you will need to collect documents, your pay stubs, fill out the loan application. You can take a look at the list of common documents that the lender asks, but also keep in mind that the list will depend on your lender, your situation, and things can vary. Once you have a letter, you are ready to go look for a home and make offers. You will have about 3 to 6 months before this letter expires, and you will have to send updated documents after this timeline. Now that you know that, let's go to Brandon, who'll answer top 3 questions we run into in the home purchasing process.
Can I change lenders after I sign the contract? We won't always recommend this, but you absolutely can. You just need to notify the seller and make sure it won't postpone or change the closing date or the process if you can. Do realtors and lenders work together? Realtors can recommend lenders and lenders can recommend realtors, but you don't have to work with them as a duo. You're free to choose the best representation for your home and finance options. When is the interest rate typically locked? When you are under contract and you instruct your lender to do so. Those are the top 3 questions, and I'm sure you'll have more, which we'll be happy to answer. In the next video, we'll be talking about the timeline of purchasing a home.